World is talking only about GameStop. How that stock went short up because there's a short squeeze. Some hedge funds went short on that company, and then Wall Street Bets, a Reddit community, decided small guys needed to teach a hedge funds a lesson and decided to go behind them. And then they wanted a short squeeze, and the market would just rally. So the stock went from nearly $4 to 400 plus dollars before it collapsed. A lot of retail investors lost money. But this is not the only thing that happened during that time. In India, the other thing is missed. This is with precious metals, and we are talking about silver. So, silver also experienced something similar during the first week of February. What happened to it is something which I want to discuss today. But before we go into that discussion, I want you to do three things. Hit the like button of my video and put on comments so that we can engage with you better. Subscribe to my channel, and if you have already done so, persuade your friends and relatives to do the same. Do not forget to turn on the bell notification. If you do not turn on the bell notification, you will not receive our content. The Google algorithm sends the content only to those who have turned on the bell notification. Welcome back to Be Rich. At the roundabout the same time, when Wall Street Bets pushed up GameStop, another major attempt was made to push up the price of silver. A lot of community people said that was a huge short position in silver and the small guys should get onto it and buy plenty of silver to stick it onto these banks, and the banks would lose a lot of money. But there were several other reasons and several conditions that show that Wall Street Bets had got it wrong this time. For the first thing, GameStop was a small micro cap stock which was very easy to push. But in case of silver, there were 48 million ounces of silver only in the city of London, and therefore there was no way somebody could have shorted silver and so much stock would be available. Also, the next important thing is silver does not mirror gold because gold does not have any industrial use. Silver has lot of industrial use, and especially in cell phones and solar cells. But in spite of demand of solar cells and cell phone spiking, there has been no increase in price of silver for the simple reason that manufacturing technologies of both solar cells and cell phones have changed, and therefore there is real usage of silver has not gone up commensurate to the increase in demand of solar and cell phones. In fact, the increase in demand of silver is marginal. Therefore, there was no case for silver demand to surge. Also, positions, if you studied the positions in various exchanges, one would have clearly known that institutional investors were net long in silver from 2019, and there is no question of being net short. Thus, GameStop and the silver strategy was fundamentally different. Analysis on GameStop showed there was a net short position in GameStop, while an analysis of commodities market showed there was a net long position in silver. Therefore, any increase in price of silver, any increase buying in silver would have not stuck it to the banks or institutional investments, but would have just increased the price of silver. In 2012, a similar thing happened when silver was priced at around $27. Huge buying interest pushed the price of silver to nearly from 27 to 33 and from 33 to 42. And then the price of silver collapsed and it kept going lower and lower. And for a long time in 8 years, silver has been languishing very low prices. 1 year ago, silver was trading at $24 and has not gone much in 1 year. In 1 year, silver has gone up by $9.14. That means silver was at around $17. Already the stock has rallied 51%. This rally is simply because of the amount of money that has been printed, and like all commodities, this price has also gone up. Over 5 years, the price has gone up only $12. That means the price of silver 5 years back, that is 2016, was something like $13. So the price went up by 84%. At the turn of the century, the price of silver was less in single digits, was $5. What silver is basically, with the use of silver coming down with better use of technology, silver's use is only becoming as a precious commodity, and therefore price of silver is not rising commensurate with the rise of technology products, which was what was the expectation in those days. So when this happened, when GameStop happened, what happened was it pushed up the price from $25 to $29, and after that has corrected to only 26.97. The articles asking the users of Reddit's Wall Street Bets to pile on to I Trust Silver, which is a silver ETF, push up the price of silver, had limited effect. Unlike in GameStop, where there was a 16-time increase in pricing, there was not, the price of silver hardly moved. And the moment the interest stopped, the price of silver began to correct. So, the ability of Wall Street bets to move stocks or commodities is limited. It has to be supported by fundamentals. The primary difference in GameStop and silver is silver did not have a large short position, whereas GameStop had a large short position. Most people should know to take a look before diving to take a plunge. Thank you for watching. Be rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.